So I was saying that on Monday, we began with the introduction, opening remarks, and the foundation, market structure, which is very much important. And on Tuesday, we looked at monthly daily ranges, the MDR, and the daily trading ranges for building bias. On Wednesday, we talked about the quarter point theory, but we could not enter daily range cycle that same Wednesday. So we discussed it on Thursday together with points of interest, momentum, and my entry system. And I'm telling you the truth. You see, my daily range cycle concept is the best. I think I'm going to have to name it CDRC. Instead of just leaving that DRC, let me name it CDRC and call it Charles Daily Range Cycle Concept. So when they ask me when they ask you what system or what strategy do you trade, you can just tell them you trade the CDRC. All right, it's the Charles Daily Range Cycle Concept. But there's no point for all those extra things. If you've learned this concept very well, you know how to use it. No problem, use it. That is the purpose of the knowledge, right? Freely we've received by the inspiration of the Spirit of God through studies also, and we freely we give. So that is it, and that is the purpose of the bootcamp, that you should be able to learn and get to understand how to use these things. I did not learn daily range cycle concept from anybody. It came as an inspiration during the course of one of my studies. And when it comes to studying, oh God, I study very well. My wife is a witness, all right? She knows that when I want to study, I study. And she knows that once it's time to study, nobody comes around, and I study very well. So during the course of a study one time, the thing came and the inspiration came. I began to work on it and gathered enough data, did enough backtesting, and that was what gave birth to the daily range cycle concept. And it has been useful to me. It has proven consistent. It has proven trustworthy. I take losses. Losses are part of it. But in the long run, the statistical probability will always be in my favor. That is just the truth. This is what my equity curve will eventually be like in the long run. It will look like this. All right. You will see it in the long run going all the way to the upside. So I will win. There are days I will take losses, draw down, but I'm definitely going to come back. I will take losses, draw down, but this is how my equity curve is going to look like. Okay. So that is one thing about my daily range cycle concept. Then I taught you guys my entry system, the candlestick patterns I watch for. And then today we are talking about putting it all together, the psychology of execution, chart studies and examples, Q&A sessions, any questions, answers, and we'll take every single thing today. Then the closing remarks. You see, we could not really talk on psychology and risk management because of the want of time, but no problem. Content on that is going to be coming out soon. Okay, I'll be starting out the bridge psychology and risk management, or the bridge show. Let's call it the bridge podcast or something like that. Okay, we'll be talking on psychology, I'll be talking on all these things, and do we get them? That is one sure fact. Okay, so before we dive right into it, yesterday I told you guys about the entry systems I use and what can you find here. And I told you guys I'm always very strict with the 1 to 3 risk to reward. It's so much that I know that yes, so many persons will be like, but you know that price is going all the way up here. Why don't you? I've studied myself, and I know that it's easier I love the set and forget method. Once you set entry, set SL, set TP, just can rest. So it's either price is taking my TP or price is taking my SL. And price is usually going to give me that 1 to 2 risk to reward or a 1 to 3 risk to reward. How about backtesting? I don't get what you mean by how about backtesting. Maybe you can rephrase the question. Do you mean that I'm supposed to teach you guys how to backtest in this session? We don't have the time for that, okay? Time will not allow us to see about backtesting, okay? So, usually 1 to 3. But then, like I told you guys in the channel, that once you get a bias, you know what that bias is. You can identify your points of interest and your zones and your levels properly. Now, this was it, as simple as this. You guys remember this trade yesterday, right? I shared this trade with you guys, not shared now, but I showed you this trade yesterday that I took, which was a 1 to 2 risk to reward. Somewhere there was a target. All right, a 1 to 2 risk to reward. This was it. All right, I showed you guys this trade. Now, I know that we are bullish. Price broke past the support and resistance level, and I told you that these zones serve as support and resistance also, right? They broke past those levels, and we got some, movement here, support here, some more support here, some more resistance. Immediately price broke above this resistance, more confirmation that, look, resistance turned support now. All right. And I did not teach you guys resistance and support, which is something I'm supposed to teach you guys because I trade support and resistance. And the support and resistance concept plays a big role. And I'm going to quickly run to that. Okay, please, when I'm done, I should teach us how to set my trading view app like yours. Okay, now run into that. Okay, so when I talk about support and resistance, the concept works very, very well. All right, and I'm going to, is that what I trade together with these things? All right, my daily cycle range concept is built around a modification of support and resistance. All right, so I know that once price broke above this level, there was a bullish bias. We created resistance, we created support, price range, we in that zone. Immediately we broke above resistance, a retest is expected, hence the reason for this. And I know that price is aiming for this next level, quick 1 to 2. Same thing applicable here. All right, we created resistance, created support, but then we saw that this zone also is a support zone with so many price actions there. So immediately I saw price broke below, broke back above it again. I knew that, okay, you see, they might want to come back to this level to retest. But before I engage in that retest, I want to see an engulfing candle move for me to engage. And this was the engulfing candle. All right. This was the engulfing candle. If you see this green candle, all right, it just engulfed this black candle right here. And entry right at the close of that candle, SL will always be below that range. Now, target was in 1 to 3. I loved where the 1 to 3 was. At least it's below this liquid target. And something in me was like, why don't you leave it all the way to this range, knowing that price will definitely get there since we're journeying from one level to another. I said, which is going to give you about a 1 to 7 risk reward. But then I said to myself, no, that is going to be me disobeying my trading plan. All right. And once I start giving rooms for this now, this is what will happen. Once I start opening up myself to why don't I now use 1 7, 1 to 7, 1 to 7? One of the days I'm going to get this indisciplined, and I'm trying to focus on what we call there is what we call system trading. Systems trading is one of the best formats we can use whenever you approach your trading techniques, and it's something that I'm currently teaching my community now. Now, system trading is just built on a specific set of rules that you will strictly follow. It is like a trading plan, but the trading plan is very much detailed on your execution, your analysis, and your exit, because your exit is way more important than your entry. I'm telling you the truth. It's one thing to enter the chart, it's another thing to know where to exit from. So I created those documents for them that will follow our system-based trading. And I told them that, look, this is what we're going to be engaging in for the next months, okay? And based on my system-based trading, I'm said I'm either, you say my voice is not clear? Please, let me be sure if it's from my end or it's from your own end. Is it like that for everybody? Okay, it's clear there. Bro, I think it's from your own end, okay? I think it's from your own end. So I created that system-based trading, and then it's something that we're engaging. And based on my system, I told myself that once it's 1 to 2 and 1 to 3 get out of the market, we don't care. We can accumulate as long as the bias is correct. I can get the daily trading opportunities. In a week, I can get up to 3 opportunities, including the losses and the profits combined. Okay, I can get up to 2, 3, 4 opportunities. Very, very much possible. So, but the issue is just let's keep it at 1 to 3. Highest, we grade our setup to A plus setup, B minus setup, because I also told them that for example, I don't use a static risk. There are 2 formats of risk management which have to do with static risk management and dynamic risk management. I am a dynamic risk manager. All right. So what it means is that some of my setups, I grade them. I use an A plus setup or either an A plus setup, or I use a B minus setup, or it's an A setup. But once and each of those grades has the risk I use on them. And based on the system trading, there is a clearly defined setup I need to see to classify this as an A plus setup. In those kind of setup, I can go heavy in risk. In some other setup, I can now reduce my risk. So I'm dynamic in risk. So in this 1 to 3 risks to reward, sometimes, if for those of you who trade props now, for example, in some of the props, I can use 0.5% risk. In some of the trades, I can use 0.5% risk. In some other trade, I can use 1% risk. In some other trade, I go in as much as 2 to 2.5% risk on that, especially when it's a clear, high A plus setup that is a 1 to 2 risks to reward. All right, I can go in with 2.5% or 2% risk on that. All right, so but those will have to do with understanding the dynamics in your risk and the setup you need to see to be able to classify that. Okay, so I knew that based on this, we are definitely aiming for the next daily range cycle. It was a very sweet target. So fine, let me participate in the 1 to 3. And we also had NFP coming up. So I didn't want to be in the market by NFP. I really wanted to get out of the market by NFP because NFP can just come out and surprise you. And that is not a surprise I want to see. Okay. So 1 to 3 got hit and we eventually got this move all the way to the upside. And that was it with GBP JPY today. I had a second one I was looking on USD JPY, which was a 1 to 2 risks to reward, but we didn't get that. Okay. So I was look at this engulfing candle. I was expecting price to come here. This was a typical 1 to 3. And at the time I did the analysis, price was still somewhere here. All right. I saved the before and the after as price was still somewhere here, but we didn't get back here and we went straight to that daily range cycle. Okay. So it's something very, very much interesting. It's something very, very sweet. A concept that once you understand its dynamic and you can perfect it and you can master it, oh, you will be good. And you think 1 to 2 risks to reward is nothing. Now you they pursue 1 to 8 risks to reward last. It's you that's looking for 1 to 8, 1 to 10 risks to reward. I'm telling you, with a consistent 1 to 2, 1 to 3 risks to reward, you'll be very good. All right, you'll be very good to go. I mean it. You'll be very good. Now, when you have a system that can easily deliver a 1 to 2 risks to reward, what are you looking for? Like high probability 1 to 2 risks to reward based on daily range cycle concept. All right, you are good to go. So that will be it for that. Let me quickly talk about my chart setup before I proceed to this. Now, I taught you guys how to plot this. For my fibs, this is the fib level I use, all right? I use these fib levels, the open, the low. Let me bring out the settings. This is the settings, right? So I use the 0, you see 0, then 1, then 0.25, 0.5, and 0.75. And my 0 and 1 level, which is this and this highs, these lows and these highs, I gave it a black color. My 50% level, I want to be sure that this is 50%, so I gave it a red color. Then the 25 and the 75, I gave it the yellow color, the orange color. So that will help me in my daily cycle range. Like for example, when I plot from this range to this range, it helps with retracements and movements too, because price moves in those quarter points, right? As I taught you guys. So if you put your fibs here, you always see those quarter points are usually good areas for retracement. As price came in here, you can see the retracements from here, the bounce off. Immediately we got above here, 50% was that retracement. Immediately we broke above, this level was that retracement still to this target. Okay? If you bring your fibs to this next daily range cycle, you also see how this level served as that level where price came into to take price to this quarter point. But all those trades are not trades that we want to be taken like that. Okay, if you see where this retracement happened also at this previous quarter point, you realize that they happened from these levels. So I will teach you guys also later on, maybe on a separate video course or stuff, how to use these extra fibs. I taught you guys only the opening and the 50% because of time. So you can see how these other extra fibs can serve as strong zones for potential retracement in the market. And once you can spot those zones, you can use it. Now, before now, what I used to do is that when I get my evidence in a zone, I like entry from zone, put my SL right below these other fibs or above these other fibs, which is usually a 25 pips move, and I target the daily range cycle next to it, okay? Or the 50% fibs of the next daily range cycle, which if I should put that 50% fibs, it will usually be here, somewhere around there, right? So for easy target, which will be about a 1 to 3 risks to reward, as you can see here. But then I don't use that from data. From data I gathered, that is not sustainable enough, all right? Our entries and our SL have to be at specific, proper defined points. In short, the right place to put your stop losses are at points of invalidation. What a stop loss is telling you is that once price gets to this particular point, let it be that price has been invalidated and the opposite should happen. And so when I put my SL, I'm telling myself that if anything should make price come to this zone or come to this level, if I'm buying, that means they should start selling. If maybe I'm looking to buy, I want to put my SL in a zone where I will say if price should come to this zone, that means they will no longer buy. The buyer should start going bearish. So I want to always put my SL at points of invalidation. So I need structure to define my SL, not any other thing again. So that is why I stopped using that method of SL and then now started using the proper method of SL, which I showed you guys yesterday. Okay. So that is it about my chart settings. I don't know if there's any other thing regarding the chart settings I need to show you. So let's now go into diving it all. I mean, putting it all together, right? Now, I told you guys, somebody asked the question yesterday, and I told you guys why I have 3 levels of the same chart here. And I was explaining to you that, for example, this chart here, the first sets are just the plain charts of the assets I trade, which is the GBP JPY, USD JPY, Euro JPY, and CAD JPY, only JPY pairs. So the first set is only a plain chart of all those assets. The second set is with another broker, and all of them, I opened them with forex.com. If you look at the broker up here, you will see it forex.com. Then this other one here is for my daily range cycles, and I plotted it with FXCM. And the one below is for my quarter point, and I plotted it with Oanda. All right, so that's why you can see GBP JPY, GBP JPY, GBP JPY. Now, when I want to start my analysis, now this is what we're talking about, putting it all together, right? When I want to start my analysis, I come to the daily time frame. Now, let me see if I can pull out my rules, and just a moment, let me check something. Let me see my trading checklist. And let me see if this is going to load up. Just a moment. All right. So now this is my trading checklist for the step-by-step process on how I build my this. All right. The first one is section 1. My academy students already have all this. Section 1 is bias building. Section 2, points of interest. Section 3, execution and entries. And then my section 4 is for fundamentals, news release. And then my section 5 is for journaling. All right. So, but then I will just proceed to talk about this. No need of, because if I say let me start reading them one after the other, all right, it will, we are going to lose track of time. So now I've made it open to you guys. So what I just did here now was a quick presentation of our checklist. All right, that is what we use in our community. So when watching this video, you can just press pause and screenshot, no problem, and then use it. That is why I just made it available. But I don't want to be reading it one after the other now. It's going to take much time, okay? So the first thing you want to do is building bias. You want to generate what your bias is. And the first thing is to start from the monthly time frame, define your dealing range. In this particular case, I want to choose these highs all the way to these lows, because that is the most recent swing point in the market. And like I said, the smaller it is, the better. So you can see these highs led to these lows and price is retracing back, okay? So that is the most recent swing point in the market. And I told you guys that once price is above 50% of the fibs, price is at premium. Once price is below 50%, price is at discount. So having said that, I can now go down to the daily time frame to identify what the daily structure is saying. Now, remember I told you guys in the bias class that you want to continue trading in the direction of the daily time frame until you see a counter break. Can you now see what is the daily direction of the market? Can you see it? Based on structure, we had higher highs, higher lows, higher highs, and we cannot call this a higher low yet, because in the market structure class, I told you that you can only call a place a higher low only when you've seen a higher high formed. So this is still a potential higher low. So as it stands now, our trading range is still within this range. So our bias as it stands is bullish because we did not get a break, and our daily trading range still span from these particular lows to these particular highs. So having said that, we want to be looking for bullish opportunities only, buying opportunities only within this range on the lower time frame. So when you go to the 4 hours time frame, you just want to focus on this range to find potential areas where price will retrace into to give you those evidence to now start going to the upside. Okay, so now that we are bullish, what next? That is the bias. Our bias is bullish. The next thing I want to do is, before I go to the lower time frame, I want to confirm potential target points using my quarter point fib levels and retracement zones. So you can see this same point here. What did you notice here? This is that our daily trading range, right? So if price should retrace, we have these levels for retracement and we have these levels for retracement. So I will keep an eye on this level now is the 192.500 levels, all right? And price can potentially retrace onto the 192.500 level, and if they're expanding, our next stop is 197.500. So quarter point has given me those potential zones that, okay, helps me know that my bias is in the right place. Okay, so and as you can see, this was the first quarter point, 192.500, which was somewhere around here. And then after that, you now have 197.500. So I'm telling myself that, okay, based on my trading range, I can expect some retracement into this zone. A good evidence I want to buy, knowing that my next buy stop can be here. All right, as simple as that. Okay, and as you can see here, what are we getting? Is that not it? Price came there. You can see the beautiful retracement. There was a quarter point here. If you notice, that was where this one happened. All right, so that quarter point served as a resistance to push price away, and now we are beginning to see some push again all the way to the upside. But the summary of the matter is that our bias is bullish. So now, after doing that, what next? You've built your bias. You've confirmed with quarter point that your bias is bullish. I'm closing this quarter point. I don't need it anymore again, right? So now I can now go down to the 4 hours time frame, still on the plain chart, and now begin to identify where momentum is in the market. So let's say you had already started spotting that, oh, the bearers are coming in, or not the bearers, sorry, the sellers. Forgive me for that. All right, the sellers are already coming into the market. That means momentum is kicking into the market. I taught you guys momentum yesterday. So, but then you can watch the video on that for clarity. But I told you guys that whenever you want to know who is in charge, you usually notice it by the candlesticks that form. Look at it. When buyers were in charge, you had more buying candles and smaller selling candles. More buying candles, smaller selling candles. All right, telling you that the buyers own the momentum currently at that particular point. All right. So here, when the retracement began, we started seeing that the sellers started coming heavy. Each time the buyers tried to come, they were not coming in very strong. Okay, they were not coming in very strong. So having known that, we know that, okay, guys, we are bullish, but we are in a retracement phase. The price is trying to retrace before we resume our bullish price action. So in so much that we are bullish on the lower time frame, you want to be looking for those short-term sells to participate in this retracement before you start buying all the way to the upside. Another place that can give you evidence of where retracement can potentially happen from is on the quarter point. Because when you come to the quarter point levels, you will see it. All right, you will see where those retracements happen from. Now, another thing I didn't have the time to teach you guys, but probably on a separate call, is what we call hesitation zones. All right, there is what we call hesitation zone with quarter point, and I have the fib settings for hesitation zone. Now, this is the fib settings for hesitation zone. If you plot from one key levels or one quarter point levels to another quarter point levels, this is my hesitation and reversal zone. All right, this is what the fibs looks like. So what it tells you that once price come in within these zones, expect potential retracement. And can you see how price came in there? And that was where the retracement happened. All right. If you go down to the lower time frame or any other time frame you can think of where major retracement happens from, you will usually identify this. Can you see this? Where did this retracement happen from? Hesitation and a reversal zone. All right. Other retracements, because it's easier to identify expansion but spotting out retracement can be very difficult. Look at these other retracements that happened all the way here. All right, price did not quite get to that zone, but it led us to this point. So a break below this level would have told you that price is bearish. And once you see this now, back to these other fibs, all right, so once you see these zones, another thing you just have to wait for is maybe price coming to these levels, or maybe some other bigger support and resistance levels on the lower time frame, and you can now begin to identify those zones. But for time, teaching about hesitation zones and reversal zones is a separate topic on its own, and would not really have the time for that. So let's go back into the analysis we were doing. Okay, so on the 4 hours time frame, we began to see that retracement, so bearish momentum. So what I want to do is that I want to be looking for sales until I see the buyers come back into the market, telling us that, okay, it's time to resume our bullish price action. Because what drives price movement is momentum, all right? And immediately the buyers, sellers came in here. Can you see that each time the buyers tried or made an attempt to come into the market, you always see the sellers come bigger, all right? So the buyers tried here, but the sellers pushed. And I told you that the 4 hours time frame is the best time frame to watch momentum. I told you guys that in yesterday's class that the 4 hours time frame is that best time frame for watching momentum. So each time we got this push, the buyers tried, but the sellers pushed more. You can see that the next selling candle was even heavier than the previous bullish one. All right, let me even zoom in better so you can even see more clear. Okay, so we got bullish trial but heavy bearish momentum. And what did you notice again? The bulls, they started trying again, but they were struggling. And another heavy bearish momentum, telling you guys that, look, momentum has not yet turned to the buying part. That is, the buyers are not yet in the market for a bullish momentum. In so much that they came here to give that bullish momentum, can you now realize that your quarter point levels has not been tagged? You want to be extremely careful playing this play, because what they did here now was to manipulate early buyers. So you would think that momentum is into the market, you try buying and you get trapped out, no problem. But do you know that even if you had tried buying, you could have on the lower time frame gotten at least a 1 to 2 or a 1 to 3 risk reward around these zones? That is just the truth. That is why I love staying with 1 to 2 risk rewards and 1 to 3 risk rewards. All right, so the sellers continued, but then you can see now, if you now notice what is happening with the selling candles here, you can see how big they were. But you can see as the sellers are coming here, rejections is happening. I taught you guys 3 types of candle yesterday: the power candle, rejection candle, and the indecision candle. So you can see here the sellers pushed, but the buyers started pushing them back again, showing you that what is happening now, a strong war is already beginning to go and the sellers are losing their strength. Then indecision candle. Now look at all the candles that were forming. Rejection candles. All right, sellers came in, buyers pushed. Seller came in, buyers pushed. Sellers came in, buyers pushed. Sellers came in, buyers pushed. And they continued this thing until we now got this main momentum kick in, telling you that the buyers are now into the market. You can see this is the 4 hours candles. It took 1, 2, 3, 4 hours, about 20 hours to move from here to these lows. 20 hours, but only 8 hours to move from here to this particular point, telling you that the buyers are now into the market. And the buyers are into the market. Another evidence is your quarter point levels that you marked out. Having done that, can you see that that was the momentum that led to this bullish price action? Even when the sellers came back into the market again, can you see all these rejection candles? Sellers pushed, the buyers came in. Sellers came in, the buyers were pushing. Sellers came in, the buyers were pushing. Sellers came in, the buyers were pushing. Sellers came in, the buyers were pushing, until the buyers eventually won the market, came back for retracement, and your move. So can you understand that momentum plays a role in guiding us? So you have to read candlesticks, and it's reading candlesticks one after the other, understanding the candlestick anatomy is a separate course on its own. Okay, so but this is how momentum basically functions. So having said that, now in this zone, I'll be looking out for bearish opportunities. Immediately I see that momentum has come into the market, I want to start looking for only bullish opportunities. Bearish momentum, selling opportunities. Bullish momentum, only bullish opportunities. Having identified that, the next thing I can now do, let me just delete all these things, is to come down, or let me not delete them, let me keep them in case is to now come down to my daily cycle range and begin to play my trades. As simple as that. Go down to the 1 hour time frame. All right. Now, this was the 1 hour time frame where I plotted all my levels. Now, you will see that this was that retracement that happened. Okay. So I now know that based on this retracement, we'll be moving from one level to another level, one level to another level. Can you now see all the good evidence? So all I'm waiting for, based on my entry patterns I told you guys, is that on my entry pattern, let me load the entry technique PDF. So we'll read the entry patterns and we'll see all the entries that we could potentially get from this market. Okay. So please, if you are with me up to this point, drop some 1-1s on the chat box. Okay. If you are with me up to this point, it's clear up to this point, drop some 1-1s. If you are lost, you are confused, you don't even know what we're talking about, drop some 2-2s in the chat box. Please, I want your feedback. So be sure that we are all moving together. Okay. We are about how many persons in the call, so I will need enough feedback. All right. So we are all together. No problems. The 2-2s, we've not, okay, just 1-2-2. Many 1-1-1. All right, don't worry. You'll get the video. We'll look at it. I'm a newbie, sir. Don't worry. If you are a newbie, no problem. You'll get to understand it. This is just the 5 days bootcamp, and I said before the bootcamp that it will not necessarily favor newbie because you need a basic foundation of structure at least and some other things. Okay. So, but that is it. Let's proceed. Don't worry. Everything will come together. And like I said, I'll release the video so you can always watch the videos and things will come together. Okay. So, based on the entry techniques, I told you guys that these are the entry techniques that I'm looking out for, right? Evening star, morning star. So now that I'm bearish for that bearish retracement, I want to be focusing on all the evening star and all the bearish engulfing candle that will be presented, right? All the evening stars and all the bearish engulfing candle. And now this is its application. So we are looking for a continuation move or a reversal. So this is how it will work. I am selling. All right, so I want to find continuation moves. So continuation moves to sell. If price start retracing to buy, that means I'm looking for continuation move for a reversal to resume my continuation move. Okay. So when I'm looking for those continuation moves now, or let me say I am selling, the continuation moves I want to find should only be evening star candles and bearish engulfing candles. Where do I want to find those things? At my daily range cycle levels or the 50% of my daily range cycle levels. That's what that means. My daily range cycle levels or the 50% of my daily range cycle levels. All right. Then another one is going to be after a break and a support and resistance zone and a reversal. So let's say these are my daily cycle ranges now, and price starts coming down, gives some evidence of support and resistance, and breaks above. They break a level here. All right. I want to find an evening star form above this. Since I'm looking for sales, I want to find an evening star above this resistance to start taking price all the way to the downside. And I showed you what an evening star candle is, right? And then the last one is now for the 0.250 and 0.750 fibs that I showed you guys for my intraday bounces. And I'll be looking for evening star and bearish engulfing candles. Okay. So having said that, let's dive right into chart. Now, this is what an evening star looks like. First candle must always be bigger than the second candle. The second candle should look like an indecision candle, and the third candle should close below 50% of the first candle. That is the concept. And this is a bearish engulfing, that the bearish candle was bigger than the bullish candle that presented. So having said that, let's look at how many opportunities presented on the 1 hour time frame. Now, this is the 1 hour time frame. Right from the beginning, can you see at this daily range cycle, can you see an engulfing candle move here? Look at this bearish engulfing here. All right. This was a bearish engulfing candle. Price engulfed this bearish candle, right? I mean, this bullish candle. So SL will be above that. And TP is a 1 to 3. All right. A 1 to 3. I know that, yes, because we are selling, we can get to this daily range cycle, which gave a 1 to 5. If you have the mind to hold that, no problem, you can hold. But my TP is a 1 to 3. So we've gotten this first trade, right? After TP hits, if I want to look for a second trade, I can mark out my fibs. Knowing that we've not gotten to this level, this is my fibs. All right? So, and at these fibs, what did you notice here? Can you see some support and resistance that was created here? All right, support, resistance. Price broke above this support and resistance, and after that break, can you see an evening star candle right there? Beautiful. This is 1 hour time frame study, not 15 minutes time frame study. All right, first candle is bigger than the second. Second is like an indecision candle. Third candle closed way below 50% of the first candle. All right, so can you see entry number 2 that you would have gotten right at the complete formation of that? SL will always be above the highs, and TP is going to be what? 1 to 3. All right, so we're using 1 to 3 here now, not 1 to 2 risk reward. So 1 to 3 risk reward. If it's 1 to 2, you would have gotten your TP since. Okay, so another 1 to 3 risk reward. Now you are still bearish. Okay, you know that your bias is still bearish. We are now trading inside of another daily cycle range. What do you want to do? You plot your fibs again between this range and this range, and we are waiting for price movement. So can you see how when price came here, they gave an engulfing candle to the upside? Well, you don't want to take that because your bias is what? Is bearish. So we waited right at this 50%. Can you see what happened here again in this 50%? This is not an evening candlestick, so I would have missed out on this opportunity. This is not an evening star candle. I would have missed out on that opportunity. Now, this is where I would have taken the next trade. This engulfing candle that presented here. And it's also an evening star. Can you see that engulfing candle that also it's an evening star? So that is more like 2 candlestick pattern formation. So this will require serious eye training to be able to see them, no doubt. So you can see this first candle bigger than second candle, that is an indecision candle, and third candle close way below 50%. So in that case, I would have entered from here, SL right above these highs, and TP at 1 to 3 risk reward. So 1 to 3 is going to be somewhere around there. So you see that this would have stressed you out, no doubt, because if it's a 1 to 2 risk reward, you would have been out of the market since. Now, this was that fake momentum move I told you guys that price did. Sorry. So this was that fake momentum move I told you that. See, my song has changed, dude. Sorry about that. Let me go back to where we're coming from. All right, so as you can see, this was that fake bullish momentum move that I told you that price initiated. But then we cannot trust this move because our quarter point that we are looking out for has not been tagged yet. So they gave a fake out. Ideally, I remember that I called out this trade for you guys. Let me bring out that trade. I know that I called out this momentum move for you guys. And which date was this? This was 30th of May. So we'll just quickly run to 30th of May and I will share that with you guys. I remember calling out this trade for you guys in the free Telegram channel. So you will not look, so it's not look as if maybe what I'm just doing is because price has given us this move already. So May 30th, where was that again? Just a little time, please. Oh, sorry about that. Is it May 30th? This is May 30th, Friday, May 30th. That was when this happened, right? Friday, May 30th. So I'm looking for Friday, May 30th price action where I called out for a bullish move, but then I had to say, look, be careful because of the retracement that was happening or something like that. I cannot find it anymore. And what time was this? That was 3 p.m. So 3 p.m. in the evening. So let me go to 3 p.m. and see if I can find a post on that, because I know I shared it, except maybe it's with my community. Sorry. I cannot find it anymore, and I don't let's not allow that to take much of our time. Okay, I cannot find that stuff again. But I'm not, maybe it's in the private community that I shared it with. Okay, but let me not allow that to take much of our time, and we're going to just resume our studies. Okay, so I remember calling out that particular trade, and then I was telling somebody that, look, be careful with this trade, that this trade is a very, very risky trade because of the liquidity here. Let me see this. Just a moment. All right, I can't find it, guys. So we'll just leave that to avoid delays. Okay, we'll just leave that. So I remember calling this, and then I told the community that I don't like the rejection that was happening on the 4 hours time frame, because the rejection was happening so fast. And if you come to the 4 hours time frame, you realize, I think that candlestick closed bearish. Let me see. Look at it. Beautiful. So we got that bullish rush, and instantly the 4 hours time frame started retracing. I was like, wait, before we start looking for entries to confirm that the momentum has shifted to the buying side, let's wait for the 4 hours candle to close. That I feel this is going to be a fake out. And the 4 hours candle convinced us that, look, the buyers tried to do a whole lot of things, and yet they closed bearish. So on the 1 hour time frame, it showed as if the buyers had already come into the market with momentum. But on the 4 hours, it only revealed that, look, momentum has not started yet. Now, this was now that momentum that led us to the bullish price action after these levels were tagged. Okay, this was that momentum that led us to the bullish price action. And I'm pretty much sure that I caught a trade on this momentum. Let me see that play again. Yes, I caught a trade on this momentum. I did not miss it. Something that I will be looking at. Why will I miss that kind of trade? So I caught a trade on that momentum, and this was the trade. I will share it with you guys shortly now. I caught a trade based on this momentum move, because I know that every single thing was in alignment, and we were looking out for that play. Let me quickly scroll down to that place. It's just a very quick search. Now, this was the play. I know I caught that play, but I will not say. Why will I miss it? So this was the play here. If you look carefully, and I took it as a 1 to 3 risk reward play. So this was that play. Immediately price came there, gave me all the evidence. I took that entry, and 1 to 2. I told you guys 1 to 2. I stick with my system, right? And price gave us that target. This was the trade right here, 1 to 2, and the target. So I will explain to you why I got that trade. All right. So this was exactly that trade. If you see here on the 15 minutes time frame, so this was exactly that entry. If you can compare very well, this was the entry, this was the exit, and just a moment, you see this here. Let me copy the image, so I will share it with you guys over here. Sorry about that. So this is it here, right? So if you look here, I plotted my fib levels. Let me plot that fib levels, which was from here, these lows to these highs. That was exactly how I plotted the fib levels, and I was watching and waiting for a very, very, very good evidence to take that trade. And can you see this? Look at this candlestick here. You see it, clean resemblance. This was the candlestick move. Price came back up, gave me a beautiful. Now this was what convinced me to take the trade. Immediately price broke back. Remember our PDF document? I told you guys that based on our entry model, after a support and resistance break and a reversal, I'm looking to buy. So I'm waiting for a morning star candle. This was the break of support and resistance. These were all the support and resistance here, plus these levels here. So immediately price broke and began to give us that reversal. The first thing I saw here, which interested me, was this engulfing candle. But then I didn't want to trade the engulfing candle, because the pattern I want to wait for is not an engulfing candle pattern. What I wanted to wait for is a morning star candlestick pattern. Now this was exactly where the morning star candlestick presented here. All right, first candle, it was bigger than the middle candle. Middle candle was an indecision candle. Third candle closed way above, so I entered exactly at the close of that candle. SL way below, and my target was a 1 to 2 risk to reward. All right, so I took it with a 1 to 2 risk to reward, but with a very good risk. I could have taken 1 to 3 risk to reward. Somebody will be like, "Ah, you're a coward. Why don't you?" No problem. I don't need to catch all the trades here. Okay, price went as far as giving a 1 to 10 risk reward, no doubt. All right, they went as far as giving a 1 to 10 risk reward, which would have been a very good and a very very nice day. I'm an intraday trader, or I don't want to use the word scalper, but I'm an intraday trader, and I was okay with it. That's what my system told me to do. Now, the only time I'm going to start taking trades like this is when I'm on the verge of, now, for example, I'll be transitioning soon to swing trading, proper swing trading. And the content of my swing trading is going to be from 1 quarter point level, not daily cycle range levels. Now, I'll be playing it based on quarter point movement. All right, so from 1 quarter point movement to another quarter point movement. But for my intraday trades, I'll be using my daily cycle ranges. But for my quarter point movement, it's going to be for swing trading. Like this, now I took this particular trade. How I would have taken this trade would have been from this quarter point after this evidence straight to the next quarter point we have, all right, based on our targets. All right, so because of time, it's almost time, and I'm not going to go in more to begin to look at the other examples that was presented here with us. So you can just go and study that on your chat, and you're going to see how, sorry, let me just delete all these things. All right, so you're going to see how, I hope I don't have any of that in there again. There's one here. So you're going to see how all those things played out, okay? You're going to see exactly how all these price actions played out. So if I wanted to take a quarter point trade, like I told you guys, this was that quarter point where they came into to now give that evidence. So if I wanted to take a quarter point play, where was it now? Let me not miss this, sorry. Where was that retracement? What am I doing? Okay, this was where it happened here. All right, that major retracement move or the second entry move. If I wanted to take that play, I would have taken the play off from here. Sorry about that. All right from these levels, SL below this low, and I could have, yes. And even if I was to take that, I will not put my SL here. I would like to swing it properly because I know that I will need to give the market enough room to breathe. All right, so about a 50 pips SL is what I'll be looking out for. And then the target is going to be the quarter point that we studied from the beginning, our next target, which is this low high is here, giving us a cool 1 to 10 risk reward. So you see that my SL is large enough to accommodate drawdowns. And at least based on that, this will be the proper invalidation level. All right, that based on this, we shouldn't see price come below this, because if they come below this, that means they're going to threaten these lows, which will now lead to a bearish overall price action, which we don't want to see. So that invalidation lows is here I'll put the trade, and this is exactly how I would have been running the swing positions by now. So even if you want to be a swing position, the daily range cycle concept can give you those beautiful entries based on momentum, also selecting your points of interest, using your 4 hours momentum, daily range cycle concept, and also timing your entries. You can use it and swing price to the next quarter point. But if you want to keep it consistent at 1 to 2 risk to reward or 1 to 3 risk to reward, you can also use that. And then one thing is sure is that before price hits that target, I can get 1 to 2 risk to reward 4 times, and that is an overall 1 to 8 risk to reward, right? So it's still the same thing as trying to swing, because if you do the math, which I've done the math, I've gathered the data, I sure know that it's either I swing this position and go through the headache of all these things. So imagine holding a trade, getting all here. Imagine the emotional trauma for price coming back almost to your entry. It's not easy to deal with this drawdown. And because I know myself that I don't have strength for this thing here now. You see this kind of stuff, I don't have strength for it. Why don't I now compound my 1 to 2? At least before the reach target, I can get 4 1 to 2 risk to reward, giving me a 1 to 8 risk to reward against an overall 1 to 10 risk to reward that is going to stress my life, plus the swap fee they're going to collect. You get, or I even take my 1 to 3 risk to reward for 4 good times, making it about a 1 to 12 risk to reward overall in the trade. Okay, so it's almost the same thing. Once you can just understand the risk application and the risk system, you are good to go. Okay, so having said that, that will bring us to the end of putting it all together. Now, like I said, I'm going to release these videos to you guys. All right, it will be available on Sunday, because I will work on the videos. I started working on it, so I'll finish the work tonight and start uploading. Yes, we're going to do questions and answer session. Just a moment. All right, so I will do the videos, and sorry, just let me send this here in case of somebody sending a message. I can easily just pick it up. All right, so we're going to do the question and answer session just shortly. Okay, so I will upload the videos. You can watch the videos and utilize the information there. Okay, so just understand that I've given you a system that works. I've given you a proven edge. This edge works. It works. It works for me. And as long as it works for me, it can also work for you, provided you will put in the work. Watch these videos as much as you can. I'm not selling the videos. Normally, ideally, stuff, what you usually see is after bootcamp, I'll just take the video to my library. If you want, you can come there and learn. Or I put it in a Google Drive and then you can pay a little fee for it to access it. But I'm giving it to you free of charge. Watch it and learn. Just watch it and learn. Okay? But one sure fact is this. This is my 5 years trading the Forex market. So this is my 5 years now in the Forex market. And it has been, let me just say it, a wonderful journey all along, because all the terrible years we had also all work together for good to bring about this particular year that we are in, or this season that we are in now. So mentorship also is very much important, and I will advise, if you can get yourself a proven mentor, get yourself a proven mentor. It mustn't be my system. Now, what I used to tell newbies is that once you're a newbie, I usually advise them to go and explore, but don't explore too long. Just use 2 months max or 3 months max to explore all the strategies you can find out there. Explore them. If you find the one that sits well with you, submit yourself under proper mentorship and go and learn. Okay, so that's just the much I'm going to say about this. But all these videos will be available. Please go and study them. Watch them many times. And then I told you guys, we have our free community chat. Join the free community chat. So if you have questions, you can pop them there. At least I will see them quickly and I'll be able to address to them. Okay. So if you have questions, you can just indicate. We're going to take our question and answer sessions just now. And so you indicate in the chat box so I can unmute you. We'll take our question and answer sessions starting from now, and that will be it. Okay. So just know that you can do good. Yeah. All right. Let's take it. All right. So you can unmute yourself. iPhone.
All right. Sorry.
Yeah.
Thank you very much for the class. I'm really grateful for this opportunity, for real, because one thing I've always dreaded is trading GJ. I always hit stop loss whenever I trade GJ. I can trade maybe gold or other pairs, but GJ, always an Excel. He always moves against my entry. I don't know why. So the strategy I'm trading right now, it works best on gold and then maybe few other pairs, but GJ does not work. So that's why I'm happy for this class. But for me to understand this class perfectly well, right? I get the point of daily bias, but is it possible for me to mark all the quarter points on one broker, everything on one broker?
All the quarter points or daily range cycle? You mean quarter?
Sorry, all the range side, daily range cycles and the monthly range. Can we mark them on the same broker so that
your chart will be messy and it will be very confusing? I've tried it before. It's not healthy. It can mess with your mind. Yeah, it's not healthy. That's why I had to go in the way I had to go by separating it in charts.
If time will not be a problem, please can we run down the plotting of all the range cycles on GJ alone, so that I can even have it on my.
Don't worry. Like we have a special video that I will release it free of charge for you. For the one is already after 10. Some persons must sleep start coming, because if I start going into that, I will take more time. But we did the class yesterday. I will send the video to you guys free of charge. Okay, so you can just watch the video and then study them from there.
Okay, no problem. Thank you, sir.
You're welcome, brother. So, and then also I would like to state, any strategy that works on a particular asset and don't really work on the other asset, I will advise don't even try to stress yes, it works on synthetic indices. So don't try to stress yourself trying to trade all assets. Jeffrey Benson, those of you who know him, traded GBP USD for years, for more than 8 years before he started exploring other pairs. That asset alone made him a millionaire in dollars. If you have a strategy that works and it works on gold, please close your eyes, delete every other thing. For example, me, I don't know when next you will see me trade gold. The last time I traded gold was sometime last year, and I'm never going to open gold again. Not because I don't love gold. I love gold. Gold is very nice, but then gold is sweet to trade with how will I say it now? Gold can give you money and it can also take money from you. And I'm talking about consistency in compounding. Now, gold moves very fast and gold is very heavy based on my own personal experience now, okay? So I was looking for an asset that can move very fast, give me what I want with ease, and not stress my life like gold. And what came close to that were the JPY assets. All right, that's why I focus. As you can see now, like I told you guys, if you tell me to do an analysis for you on that asset with my system, I will do it perfectly, I will do it well, and I will call out trading opportunities. But I have stayed so much with GBP JPY. I just started recently introducing USD JPY, CAD JPY, and the rest of all that. I've stayed so much with GBP JPY that you can almost wake me up from sleep. And I can tell you that you see this kind of chart pattern, I've seen it before in GBP JPY. Now, those of you that have been trading for some time, you will agree with me that there are some days you will stay in your chart and you will see a chart pattern present, or the way a chart is going to realize maybe form, or a candlestick, or the way the price movement is going, especially in gold, and you realize that I've seen something like this happen before. And usually what happens, I don't know whether anybody is a witness with that, maybe it's only me the things to happen to, but it happens to everybody, and they call it intuition trading. So I've stayed with GBP JPY so long that some of the movements, and the truth about the matter is that all price actions are repetitive. You see all these chart patterns that you're seeing here now, if you go back in chart, you will find exactly patterns like this. I mean it. Exact patterns like this in the market. So when you stay with an asset so long, you can easily spot them without difference. So if you have a system that works on gold, don't stress yourself wanting to learn GBP JPY. You can't make the money in gold. That is what I will say. It's just like chat deja vu. Thank you very much. All right, so just go and study it. So it happens very well in EU and GU. Exactly. Somebody said they have a question. Who was that? John. So let me ask it to your mute. I've asked it to your mute now, so you can unmute yourself and ask the question to address that.
All right. Good evening, sir.
Good evening, brother.
Thank you very much for the class. It has really helped me. So my question is a bit funny, but let me just ask it. In this system, do you have a model for like flipping, stacking of accounts, flipping of accounts? Does it support anything like that?
Now, in order to let me answer that, well, we have to first of all understand how accounts are flipped. Okay, it's not a bad question. Now I understand your question, but you have to understand how accounts are flipped. Now, for you to flip an account, you have to get a very good edge, number one. And for you to flip an account, the analysis just have to go your way. People that flip accounts take losses, to which you agree with me. Okay, so in order for your account to flip, that means your TP got hit. And the only difference between flipping accounts is and the only difference is that you stacked plenty more positions. Maybe you're risking, you have $100 account and you can flip it to $1,000 account. You're flipping $100 to $1,000 account, in all honesty, has almost nothing to do with risk to reward ratios. Because if you talk about risk to reward ratios, traders like Kenechukwu don't trade with high risk to reward. His risk to rewards are usually 1 to 2 risk to reward, or 1 to 1.5 risk to reward. I know a trader that stays only with 1 to 1 risk to reward, or 1 to 1.5 risk to reward. All right, many of the flipping guys. So if I trade 1 to 2, now this is how to effectively flip, irrespective of the strategy. I don't want to answer it based on my strategy now, so that you can now make that decision yourself. Irrespective of the strategy, if your analysis or your win rate is on a very high side, and you can categorize your setup. I told you guys something about my dynamic risk system. There are setups that we see, and I am pretty much sure that this is an A+ setup. In A+ setup, if for example I have $1,000 account and I see an A+ setup, I used to go in as much as risking 30% of my account, which is not advisable. It is a very bad thing to do actually. But because of the confidence, and I know it's just a simple 1 to 2 risk to reward, I can go as far as risking 30% on the account. Somebody might choose to want to risk his entire 100%. That is okay. But flipping accounts works when you understand accounts or trade grades or chart grades or entry grading. So you can now easily spot out A+ setup I'll use to flip. Once the setup is not categorized as an A+ setup, I don't want to be found going too much risk in that. So that you can now lose less when the odds are not really in your favor. But when the odds are completely in your favor, you go heavy risk. For example, the GBP JPY we've been studying now, you know that, okay, based on quarter points, the odds are so strong in your favor when momentum kicked in from here. Why will you want to go with a low risk? That is a waste of pips. All right, you can go in with a very good risk, size up your trade, and maximize this move. This alone now can flip your account. So the concept of flipping account doesn't just come with the fact that you see a trade and then you just start showing lots. You will wound yourself. Those who flip accounts know how to properly grade their trade setups, and I advise you do that. But nonetheless, more important is that I will advise you try to build consistency than trying to flip. Flipping will burn you if you don't have enough. Flipping will burn you so much if you don't have something to cover up for that losses. If you are funding your capital with a money that you worked hard to get, and that is your all and all, don't think about flipping. Do what I do in my own case is I create what I call a buffer. So if, for example, and this is how you can deal with it, if you have $100 account and you want to flip account, and this is all the money you have, create a buffer for yourself. Consistently grow the $100 to at least $300. Then when you now do all these $100, and maybe you've grown it from $100 to $300, take out $70 from the $300 and fund it in one account. Wait for A+ setup and go full margin. When I mean full margin, continue stacking and stacking and stacking without stop loss. At least you know that if you lose, you are losing $70 and you still have $230 left. It is madness to have $100 and you don't have any other source of capital. Probably you are in debt and you are going full margin on your $100 account. For what? It's not advisable. All right. So create a buffer. That is why those that you see flipping, they can lose $70. They can flip $70 to $1,000, but they have $70 to lose in 10 places. So even if they try first one did not work, second one did not work, third one did not work, by the time the fourth one works, they've recovered all the other losses they've made. That is the ideology of flipping. This way you flip with peace. You can even flip and go and sleep. Okay? I don't know if I answered your question and I did justice to that. That is all I have to say. But yes, long story cut short, you can also use my system for flipping, but I don't advise that. Okay? Just trade and be a consistent trader. So any other questions?